Hello everyone, this is monthly fixed income update from Bajaj Finserv AMC. In month of April, 10-year G-Sec yields in India eased by around 12 basis points to 6.36, despite the rising US yields. The move was supported by RBI's OMO purchases, a dovish MPC outcome, and fall in CPI inflation to a 6-year low of 3.3%. RBI's positive action on liquidity has softened the yield curve across the tenors, leading to a downward shift in the yield curve. In addition, the global growth outlook was cut sharply downwards to 2.8% from 3.3% for the year 2025. This is in line with the escalating trade tensions. Growth projections for major economies like US and China has also been lowered significantly. In US, asset markets recovered from the lows seen post-tariff announcements. Interest rate future markets are not pricing in any rate cuts in next couple of FOMC meetings. The hard data in the US, like data on jobs and consumer spending, is still looking stable, but the survey-based data has started to weaken. The Fed, in its recent meet, maintained pause as tariffs can cause negative shock to the growth and create inflation pressures. India remains relatively resilient as the fastest growing major economy, though it has to face some moderation in growth due to global developments going ahead. The rupee has strengthened from the lows seen in February, supported by a weaker dollar, along with manageable CAD and limited direct impact of tariff announcement. Moreover, services exports, which have been excluded from the tariff measures, should also continue to support India's external sector. Going ahead, trade and geopolitical tensions will be the key drivers for the rupee's direction. CPI inflation readings have surprised to the downside for the last 2 months. April CPI data is expected to be between 3.25 to 3.5%, much below the 4% target. Core CPI inflation may see an uptick mainly due to higher gold prices and housing prices. However, core inflation excluding gold prices will rise only modestly. The inflation outlook overall remains favorable with moderation in global commodity prices and forecast of surplus rainfall in southwest monsoon season. The decline in the dollar index and expected Fed rate cuts also provide room for the further easing in India. The macro backdrop for interest rate remains favorable. However, recent escalation in the India-Pak conflict poses challenges and has pushed up the risk premium without putting any pressure on the baseline macro projections for the year. This may also mean that the RBI may have to intervene intermittently to contain volatility. Looking ahead, there is a high probability that another 50 basis point rate cut may materialize. However, deeper rate cuts remain possible only if global trade tensions escalate. The current 2 percentage point real rate is higher than needed in an environment of exceptional global uncertainties. The domestic growth inflation trajectory demands a supportive monetary policy. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.